Good morning, everybody. Welcome to the Hardcore Mortgage Real Estate Business Podcast. Today is Wednesday, January 11th. This is the second podcast of the new year. Really, everybody, we're going to introduce our panel, but really, everybody, this is the first work week everybody's getting back. Everybody takes that first week of the new year. They kind of chill into it. They're kind of casual, but you know what? We kind of have a great panel this morning. We've got from Realty Executives hometown in Shelby Township, Joy Roshitz. Joy, good morning.
Morning.
And Jeremiah from AAA Warren. Jeremiah, what's happening, buddy?
Good morning.
Okay, Jeremiah, do we pronounce your last name Hayner or Honer, or how do we pronounce it?
You got it, Hayner.
There you go. See, I took that class because my name's a normal name. Okay. Everybody, along with the panel, we have Lisa Lawson.
Good morning, everybody.
And Becky Allen. Good morning, Becky.
Hey, what's up, everyone? Welcome to 2023 first podcast or second podcast.
Second,
really.
but the first podcast
official.
of a real work week. Everybody kind of, how people are. I don't know. We never take time off, rarely. I can say that with conviction. If anybody wants to go ahead and challenge me on that, I welcome that. I welcome that challenge. But in any event, it's fun to be on a podcast with Lisa, Becky, bringing Joy and Jeremiah on. And I want to talk about a couple things going into the second week of the new year. Look at housing inventory right now going into the second week of the new year. And this was a little bit of a startling statistic. It is down 4% from this time last year. So getting right into it with Joy. Joy, what are you seeing in your market? Because every market, these are national statistics. Every market is a little bit different. Tell me what you see in your area. What's going on specifically to your area?
Well, I actually just ran statistics yesterday and I did a bunch of different counties. I just went, a general county search. And I found consistently around the Metro Detroit area, 15 to 25% increase from 12 months ago. So for example, I live in Macomb County and I'm looking right here. There were about 16,000 on the market by the beginning of February last year. And right now we're sitting at about almost 20.
So what we see, Joy, I think that's a great point. We always say it's specific, it's situational. And when we take these national statistics, they're polling the major metropolitan areas. And with you, Joy, you ran your own numbers and you're saying that there's an increase. So let's dive into that a second with you, Joy. Okay. If there's an increase in the market, we know that there are a ton of buyers out there. That must mean that in your area, Macomb County, you're seeing a lot of sale transactions.
Well, yes, but actually that number is very similar to 12 months ago, closed transactions. I have, actually, yeah, they are a little bit higher, but for the most part, it's pretty similar to last year. And I think like Lisa and Becky probably could explain a little bit more about that, but I think it has a lot to do with the interest rates and a little bit of sticker shock that hopefully will wear off soon, but I think it's starting to.
I think that's a great segue. Lisa Lawson, you're out there. You work with Joy every day. Tell me about the inventory as it relates to the prices, as it relates to interest rates. Go ahead.
Yeah, we've been talking about this for a while, and we're going to reiterate it again. So there's been an increase in listings, which makes it easier to get the home that you want. But as Joy just, pointed out, the number of sales is fairly stagnant. It hasn't really changed that much. It's a tiny, tiny increase over last year. So that increase of listings and homes available means it can usually be a little bit easier to get the house that you want. I think part of the reason that this gap has been created too is people are a little bit nervous to take the plunge. They hear all these things about interest rates. They know interest rates went up. They maybe missed out on last year's really low rates. So I think people are a little bit more hesitant, a little bit more shy to jump in with these rates, although they shouldn't be, because owning a home is a huge deal. And there's so many other benefits that come with it over renting. But I think that's part of that hesitation. And in the interim, again, more homes to pick from, like Joy said. But like I said, the sales haven't really changed that much over last year, at least in Macomb County where we're at.
I think that's great news. I mean, if sales haven't changed and it was a good purchase market, Becky Ellie, in your area, what are you seeing? Is inventory still scarce? Are we seeing an uptick here? As Joy mentioned, we're sitting here in the dead of winter and Joy's seeing more homes come on the market, Becky.
I feel like it's been a long time in Michigan since we had a really stale winter anyway. I feel like there's been, as the last couple of years have been going on, it's been a 365 state, which was fantastic. I mean, even in 2018, I feel like we were talking about this, but as we're entering 2023 early on, obviously, affordability is always going to be a top challenge for these new potential home buyers with, the home prices have still been increasing, not as rampant, but the interest rates also increasing, so it also we have to make sure that these buyers know what they're getting into. And as far as listings, I feel like there are some people still sitting on the fence that secured these lower interest rates because unfortunately, we are very reactionary, and a lot of buyers, sellers, they listen to what the news says when in reality, they need to be focused on what's best for them. So as soon as people stop kind of being influenced by outside parties and really just kind of look at what the situation is for them, because the best time to buy is when it works for you, and the best time to sell is when it works for you, not based off what someone is reporting in California and we're trying to relate it to Michigan. It's just not the same.
Yeah, that's why I say, you could watch the news, but you don't have to listen to the news, right? You can watch it, but not necessarily listen to it because it might not affect you. And Joy gave us great statistics on there. Nationally, alarming stat to me anyways, is that the inventory was down 4% from the previous week in our area, in our market area. And I can relate to this because I went to a realtor event last night, and the realtors I was talking to, Joy, were telling me they're extremely busy with buyers and showing homes. And when you're talking about January 10th, January 11th of a brand new year here in southeastern Michigan, that's music to our ears, Joy.
Yeah, the past couple of years, I don't think it really slowed down that much in January compared to years past. But this year, yes, I think there's still plenty of business to be had out there for those of us that really want it. And I think, Becky and Lisa both made great points. Sometimes you have to hold the buyer's hand a little bit and let them know. I'm sure you guys have said this before. The rates are a little bit more normal than they have been the last few years. So sometimes it's just a matter of educating people.
Yeah, before we go to our insurance expert, Jeremiah, I want to address this one thing with the panel. All right. Home prices for the selling season of this spring to summer. We always know business is more brisk. Not that it's not brisk in the first and fourth quarter, but let's face it, in Michigan, when the sun shines, people are out and about. How do you think the inventory will relate to home prices, Joy? Are prices going to go down? Are they going to stay the same? Or are they going to go up a little? In your opinion, of course, only.
With my crystal ball, right?
With your crystal ball.
Yeah. We might see a little bit of a decrease, but I don't see anybody predicting that the house prices are going to crash this year. I don't think that's a concern for sellers. The main thing for sellers is that they might have to wait a little longer to get an offer on their home because the days of multiple offers are right now, at least, not, and they may not be coming back. It's been a bit of a crazy market. A couple of years ago, I knew we were in for a crazy season when I had Lisa, you were there.
Yes.
I had an open house and I had about 150 people walk through. And fortunately, Lisa came to give me some cards and stayed, and several different people came and stayed because it was just crazy. And it's been crazy ever since. So it's going to be more balanced, but I think it's going to be good.
That's a great word, balance, stabilization. Lisa, what are your thoughts about the prices as it relates to the inventory?
Yeah, I think, we've been seeing these insane inflation amounts, right, over the past couple of years. A house that was maybe listed for 150 2 years ago went for 165, and then it was 190. And over the past 2 years, we've had these huge jumps. I don't think that's going to be the case. I think we're going to, stay fairly stable, maybe increase slightly, kind of like normal, right? Like the normal amount of inflation that we're used to, just a few percent points, every year. And I think that's what's going to happen this year. And in light of that, just like Joy said, I think homes are going to stay in the market a little longer as inventory continues to increase and there's more choices. I think people won't feel that desperation to make offers and then have a little bit of buyer's remorse, which was happening because they were just trying to get in. They had like 12 offers rejected. They couldn't get an offer accepted. I don't think that's going to happen to near the extent. I think there'll be some price corrections. We might even see some people who really want to move and even drop a price after the house has been on the market for so long. So I think this is really becoming a more stable market, which is a huge advantage to home buyers.
Yeah, Becky, feelings and emotions change day to day, hour by hour, let alone week to week. What's the vibe out there right now on January 11th with regard to home prices and the activity that's going on?
The buyers out here right now, they are understanding the sense of urgency. I feel that there was a little bit of a pause in November, because people procrastinate right before the holidays, but coming right into the new year and people wanting the new me, same me, new me, whatever their mantra is, they're understanding that home ownership is key because they do not want to pay rent. And those that don't understand it are going to be crying a little bit because investors out here are understanding that if you're not buying, someone is going to be renting and they're totally capitalizing on this market. So historically speaking, on paper, this is still very much a seller's market. It's going to be a long time before we ever really have that full inventory because of the lack of housing over the last 10 years. I do think that we're going to see these housing prices increase as more and more buyers are going to start coming out in droves. I feel the rates are going to settle down a little bit middle of second quarter. That's my crystal ball prediction. And I feel that we are going to be in multiple offer situations. But again, you're in that right now. You're either it's under asking, it's at asking, it's over asking, it's multiple offers, it's concessions. Like this market is very unique. And, we're all professionals. So we come off of last 2 years of unprecedented business, the busiest we've all ever been. And now here you are, we're re-navigating it. And the reality is that, if the people that are out there struggling professionally, it's because the market changed and you didn't. And if you're not constantly adjusting to what is happening, you're left behind because if you're talking about it, it's the boat is sailed. If you're reading it on paper, the boat sailed, we're in a totally different situation. So, and I'm happy to be on this podcast talking about this stuff because it's coming. So next couple months, you're going to see multiple offer situations and it's going to start driving prices up a little bit, in my opinion.
I believe that. That's where I sit on that. But I want to turn to Jeremy Hayner right now. AAA 12-mile road and where?
Warren, Mound. Yep.
I know, 12 and Mound in Warren, Michigan. Jeremy, I have a question for you because it just hits me, right? If prices are going up on homes and, homeowners insurance obviously is going to go up a little bit with the purchase price of a home, what's that done to your business? And how do you see your business covering people's homes, homeowners insurance coming up for the year?
So the price increases are important for market value. We write replacement cost policies. So we're looking at increases, based on economic indicators. So you have material costs going up, lumber, any of the home items that contain petroleum or oil. You've got labor prices, you've got supply chain issues. So all of those things factor into how we rate for a home policy. And with 2023 coming up, there's still some backlog and some lag on some of that stuff. But what we're looking at, most importantly for the customer, especially first-time buyers, is that when they are looking at that home and we understand that market value price, we need to rate properly for the replacement cost. And you can still capture really, really good rates despite the pricing out there. So there's a lot of opportunity, and that comes with understanding your agent, what kind of discounts are available, what options there are for on the home right now. There's a lot of opportunity to get a really good rate in that market.
Yeah, one thing I could never understand, Jeremy, I mean, when somebody buys a home, it's the largest investment they're going to make in their life. They only do it maybe a couple of times in their entire life. And then they want to go ahead and watch this. I know my panel's going to start laughing. Joy, you might laugh. Then all of a sudden they want a nickel and dime on the homeowner's policy, right? Now,
Yep.
I got to tell you something. I want to be covered. Now, of course, I don't want to pay more than I need to pay. Nobody really does. But that's where the relationship, Jeremy, that you have with that homeowner comes into play, because when we're doing a loan for someone, we're doing a mortgage, Lisa, Becky, and I know when Joy's selling a house to somebody, we have a relationship and we always want to set them up for success. Why would I ever want my client to buy minimum coverage? I want maximum coverage for my family in case, God forbid, that's why it's called insurance, right? In case something happens, Jeremy, tell me about that.
Especially when you have first-time home buyers, that's a big deal because we do see a lot of things that occur in that first year of owning your home. which is your largest investment for most people. So yeah, having a relationship with the customer is absolutely critical, but I also believe having a relationship with the lender and the realtor and working as a team of professionals is going to set that client up for much better success and coverage. And it's my job to point that out when we get to the home insurance side of things. I'm trying to explain to them price is important and we got to get you at the right place, but we need to make sure you're covered, because we don't need you filing a $80,000 claim 3 months into your home insurance because you didn't have coverage for something, and then
No,
you're out. It's awful.
I agree with that. Covering somebody so they can lay their head down on their pillow and sleep at night is our ultimate goal. It's just a service-oriented industry, like a realtor, like a lender, your insurance person. And I'm not talking about these online insurance people that you can't call and get somebody out to your house. Jeremy Hayner is going to come out to your house when you have a problem. He's going to answer his phone when you have an issue. So everybody, having a relationship with your homeowner's insurance person is paramount in my book. So Jeremy, I appreciate you being on the podcast, and we're going to get back to you. This is the Hardcore Mortgage Real Estate Business Podcast. Today is January 11th, brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, equal housing lender. 2289 is our NMLS number. Fairway is a top 10 lender in the United States. What does that mean? We underwrite, close, fund, process, originate our own transactions. Yes, we bring the money to the table for everybody. We do not have to ask for permission. We don't wait for checks. It's not that. All right. We do everything in-house so we can offer you the best service. Coming back to you, Joy, for the foreseeable future, we can tell that the Fed Chair Powell tomorrow is going to wait for the Consumer Pricing Index. The report's going to come out. And it's probably going to show prices are still up a little bit, but they might, instead of raising the rates another 50 basis points, there's talk about going ahead and raising it maybe 25 basis points. I'm betting on the 50 because, as everybody knows, if I say 50 and it goes 25, then we all win anyways. If it goes 50 and I say 50, well, then it's as predicted. We don't know how it's going to affect the market. Joy, interest rates have stabilized, but what I'm going to tell you right now is that I think that right now, and this is going to be some good news, we feel the market has baked it in already. The stock market's doing well. It's up today. It's up over the year. I think the market has accepted, and I'm talking about the stock market, the financial marketplace, and the real estate market in terms of interest rates, has already accepted another minimal rate increase. And it always has to do with what the Fed chair says. Inflation drives rates, nothing else. The bond market doesn't, the housing market doesn't, inflation drives it. So I'm telling you, Joy, I believe, and this is just one man's opinion, I believe we're going to see a 50 basis point hike. I believe it's already baked in. And I believe, Joy, that you're going to see stabilization in interest rates. And what does that do to the home buying market? It's going to put people at ease because it's going to be more normal, and people are going to be clamoring. They're going to be calling you up. They're going to want to sell houses and buy houses before April 1st this year.
Oh yeah, I think you're right, and I'm ready. I'm ready to go. I wanted to mention something too. When Jeremiah was talking about first-time home buyers, I think it's really interesting. The trends over the past several years have shown that younger buyers want to move into places with a walkable downtown, like Royal Oak, Ferndale, and as those places are filling up, cities are developing their downtowns, and I think we're going to see a lot of people wanting to get into the housing market that haven't previously, and they're going to want to go to places like in Macomb County. I can see St. Clair Shores is getting really hot, so I think we're going to see a lot of that too, which is great for first-time home buyers to finally get into the market.
Well, Lisa and Becky will talk about it. Lisa, talk about first-time home buyer programs. Talk about Michigan. Talk about anything that we're proponents of getting people in homes that they can afford. Talk about the programs that you like to put people in for success.
Yeah, I couldn't agree with Joy more, especially about first-time home buyers really looking for cities and towns with a walkable area, like a walkable downtown. I think that's probably generational. I mean, I never looked for that, but I know my nieces and nephews prefer it, and my nephew lives in St. Clair Shores now, so I definitely think that that's a want in a lot of younger families. So, and we can help get them into those first homes using a multiple of programs. We always talk about MSHDA. It's one of my personal favorites. MSHDA is the Michigan State Housing and Development Authority. They either offer a couple programs for first-time home buyers. You can either take a below market rate. So we have a rate that is well below market if you do not need down payment assistance and qualify. And that rate currently is 5.875. Or you can get some down payment assistance if you need it. Depending on where you live, anywhere between $7,500 and $10,000. That rate is 6.375, which is still a phenomenal rate. And in that case, you get, money to help with down payment, closing costs, taxes, homeowners insurance, anything else that you might need as part of that transaction. So it really helps people who, if you've been renting, sometimes it's hard to save additional funds for down payment. So it really helps people who, have been paying rent on time. They know they can afford the place. They've just had a little bit of difficulty maybe gathering up those funds to get in. We also have another program called the Chenoa Down Payment Assistance. There's local cities offer it. City of Port Huron has one. City of Pontiac has one. There's so many programs. There's also a National Faith Home Buyers in Wayne County. They have a program that's $14,999 of assistance for specific cities. So if you think you can't move forward because maybe you haven't saved enough money, give us a call. It's worth it to see if maybe you've only got a few grand saved, you've got tax refunds coming in, maybe you're going to get a tax refund that can make up the difference. This could be the year for you to get your own home.
Becky, some of your favorite first-time home buyers programs are what?
Everything that Lisa just listed. Then we also have a couple of grant programs where if you are in a underserved community, we actually are one of few lenders in the state of Michigan that are offering these specific programs. They also go out of the state of Michigan and Chicago, certain areas where the property has to qualify. There is no income limit on this, but you can get up to $7,500 in a grant money. That means you don't have to pay it back. You can get your title insurance reimbursed as well as the appraisal fee reimbursed. So these are all things that when we are having these conversations, we are not rushing to just, send a pre-approval out there just to say we did it in 5 seconds and good for us. We do take our time. We make sure we analyze the situation because it's not the soup du jour. Everyone's situation is not different. And it takes time to cross-reference all of these specific programs because it matters. And even though you might have the money in the bank, if we can save you $10,000, why not? Why not take advantage of the money that's out there? And we take a lot of pride in the fact that we make sure we take the time up front because the work up front creates a much smoother transaction. And we really take time to educate people because you have repeat buyers that I talk to that didn't use us necessarily, but they are on the second time around and they have no idea what they even went through the first time around. It's like they're going through it all over again for the first time because no one really took the time to explain and set the proper expectations. And when you're working with people like Joy, Lisa, myself, and anyone at Capital Mortgage Funding, that's our wheelhouse, is taking that time, slowing it down. It might seem fast to you, but we try to make it come at you in slow motion so you are very aware of what's happening.
Yeah, and I want to say, Becky, that this is not the mortgage industry. If you're a realtor, you're an insurance person, as Jeremiah Hayner is from AAA at 12 Mile and Mound, there is no one size fits all. I was on a call last night till 9 o'clock explaining to a person that there's a company out there that they're just pushing one program. We call it the product du jour, the program du jour. They're pushing the 2-1 or 1-0 buy down. Everything's a buy down, buy down, buy down, buy down. But people don't realize they're paying for it. And by the way, when the rate finally settles in to a fixed rate, it's higher than the going rate is right now. So unless you're going to stay there for a very, very long time, what are the chances that we're going to be able to refinance somebody out of that program, then all that upfront money goes away? I'm going to start off. We're going to give everybody the last word. This is a Hardcore Mortgage Real Estate Business Podcast brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, Equal Housing Lender, 2289. It is our NMLS number. That's for all you legal and compliance and CFPB people out there. So I'm going to start with Jeremy. We're going to go to Jeremy, go around to the panel. Last words, any great advice that we have for everybody? Jeremy Hayner, AAA, 12 Mile Mountain Warren.
Well, Happy New Year, everybody. My recommendation is please contact your homeowner's insurance agent and ask for a policy review. Look for coverage gaps, look for opportunities for savings, and you cannot put a price on peace of mind. Harvey said putting your, going to bed there and laying your head on the pillow. That's perfect. Perfect analogy. So definitely ask for a policy review. You'll do wonderful things and you may be able to save some money.
Great advice. A policy review and a mortgage review is along with your real estate person taking you out, showing you new homes and helping you through all the relationships. Joy, last words for the day.
Last words for me are, I think it's a great time to buy or sell a house because we've come into a more balanced market. Make sure that the first thing you do is see somebody awesome like Lisa or Becky and get yourself pre-approved. And you will probably be surprised at what you're able to afford and what you can do with the money that you have saved and the money that they can help you find in the form of, grants and down payment assistance. And let's get to work. It's going to be a great spring.
Love that. Thank you, Joy. We appreciate you being on the podcast. Lisa Lawson.
Yeah, same thing. The first step is the most important one, and it's making the call. So before you even start looking at houses and getting excited, call somebody here at Capital Mortgage Funding, myself, Becky, anybody that works here and says, hey, I want to know if I can afford a house. I'm interested in becoming a homeowner, and we will help you. And sometimes it's a process. Sometimes we pull your credit and it might be we need a little work, but we're going to help you get that work done. So if you're not ready now, you'll be ready in 6 months or maybe next spring. And a lot of people will be ready right away, and we'll get you in and hook you up with an amazing agent like Joy with a lot of experience in the area that you're looking at. So you can definitely get the most bang for your buck, but you got to make the call.
We appreciate that. And Becky Alley, last words of the day.
Yeah, you don't know what you don't know. And a lot of people think they don't qualify when they do, and then they think they qualify when they don't. So definitely starting the conversation, and we are butting up to tax season for 2023. So again, if you're a self-employed buyer, if you are, where your tax returns, or maybe you need to claim a little bit more money to show income to allow you to purchase a home. These are the very pivotal moments that you need to have these conversations, especially if you're self-employed, so we can analyze your income situation to make sure that when you file your 2022 tax returns, you are in line with your financial planner, your CPA, and you know exactly what you need to do in order to make home ownership a reality for yourself. And this is so key. It's so pivotal. So give us a call. You cannot start the conversation sooner, whether it's your 1 year, 5 year plan. Get in line with the right people, come up with your team so that way you know exactly what you're getting into and you can do it with confidence.
Love it, Becky. Thank you. My last words for the day are as follows. Mortgage rates have stabilized. They're in the 6.5% range, which is extremely low. Anybody will tell you that they're low. Becky Alley's grandma will tell you they're really low. Compared to years and years ago at 17-18%, and even 4 years ago when rates were on the rise. 6.5 is not a bad range. We're awaiting the Consumer Price Index report tomorrow. We're waiting what the Fed's going to do tomorrow, raising rates, I say 50 basis points for the foreseeable future. The moral of the story is, as Joy said, what are you waiting for? Don't wait to buy. Competition will be heavier, and the overbidding will start again in the springtime. So this is the Hardcore Mortgage Real Estate Business Podcast for January 11, 2023. Love to thank Joy Roshitz from Realty Executive Hometown in Shelby Township, Jeremiah Hayner from AAA Warren, 12 Mile and Mound, Becky Alley, Lisa Lawson, our producer and director, Roberto Beauchesne. He's in the booth. He's always got our back. We appreciate everybody. I want to thank you guys. I'm grateful to be working with you and grateful to see you every day. Thanks again, and we'll see you soon.